Good morning, traders. Happy Friday. It is 11. It's 8:02 a.m. Chicago time, 9:02 Eastern on the 2nd of November, 2018, the first Friday of November, which also makes it non-farm payroll Friday, unemployment day. We just got the unemployment numbers a half hour ago. I'm sure you all know what they are. Big beat, but the market just sat sideways, didn't react at all, really. And that's where we are. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market's allocating to risk pretty solid. Gold is off $6.20. It's the laggard today, down 0.5%. Crude again taking a hit, down 0.5%, down 63 cents. It dropped yesterday and held sideways. Um, The yen is off. The 10 years are off 18 ticks, and well, it's 9 ticks. They do have ticks there, and the bonds are down 9 ticks as well. The leader today is the DAX up 202 points, 1.77%. Euro stocks up 1.44%, followed by the Dow, the Russell, and the S&P 500s up 16 points or 0.58%, trading at 2754.25. So clearly allocating to risk this morning. The big news yesterday was at about midnight my time, 1 a.m. Eastern. There were positive signals from a phone call between the U.S. and Chinese leaders could reduce the probability of further U.S. tariff increases in January and beyond. Safe haven flows recede, risk on appetite buoyed. U.S. President Trump said to have asked Cabinet to draft possible China trade deal. The push was prompted by a recent call between Xi and Trump. So this caused a big spike. We'll look at the overnight action. It's very obvious. We also had Apple earnings yesterday. Apple beat, but the sales numbers were lower. The stock took a bit of a beating. The stock really controls a disproportionate part of all the major indices. Uh, Too big to fail, probably at this point, I would say, for Apple. But that's where we stand this morning. Looking at what's ahead, we got our unemployment out of the way. We're looking for durable goods at 10 Eastern for September. There's no estimate. The prior 0.8%. And also looking for preliminary factory orders for September, looking for 0.5 in there. And that pretty much finishes off the day. There's one ECB speaker, Nowotny, at 11:30 Eastern, but that's what's on deck. So 10 o'clock Eastern numbers, and then it's the weekend in terms of economic releases. As far as what we expected yesterday versus what we got, here's the expectation. Bada bing, bada boom. There we go. Whoa, that does not look right. So it's picking up a portion of my other screen. No idea why. There we go. It's a little bit better. Not really. So let me fix this a second. This tells me that the other screen is going to be off as well. So I'm trading from home today, and therefore it is behaving this way. And anyway, that's good enough for now. Yesterday, the key expectation was for us to drift up into and through 27.27, looking for sellers to start coming in and pushing lower and filling the gap. There's a gap zone right in here. That idea didn't work out. What did work out is a test down and a push higher and out of the range yesterday. That was scenario two that worked out on the dot. Remember, I talked about what is it, Wednesday and yesterday. I talked about 2750 being a key test area this week, and we are right there. We're trading 2749 right now. The overnight high is much higher, so we did accomplish some of that. Oh my God, the screen is so off. I apologize for this. I'm not sure what the deal is here. So yeah, this screen is way off. So I don't know. That's good. That's going to make it a little bit off. I apologize for that. Just have to keep moving on. So yesterday, what did we get? There we go. Turn that off. Come on, bro. There we go. That's interesting. Sorry, folks. Not sure about these technical issues here. So yesterday, we pushed right into the point of control and then rotated up and out of the range. We didn't quite get to 2750, but we pushed down into the point of control right here, and scooched up. The target was up here. We couldn't quite get there. We got to 41 and a quarter, finished at 27.38. That was yesterday's play, and again, it looks just like we saw here. Push to the point of control, and then turn up, and then push higher and out of the range. Was looking for 27.50, just didn't have the strength to do so, the resolve to do so. So pretty much right on scenario two. So with that being said, what happened then? The overnight session, we reopen. 2738 is where we closed. We drop right off. Why? Because of um, the Apple earnings right here. Just a straight drop down into the IB high at 2726, and then we reopen at 5 p.m. Central, 6 Eastern, and we take all of that right back to the SOC, back to 2738. And then from there, it's just a sideways trade into the Asian session. So the Apple news is just written off right after earnings. And then immediately it starts to run up on the Donald Trump. This was right at midnight. The President Trump instructions to start drafting up an agreement with the Chinese on trade. It just takes right off, and we've just been holding steady. The non-farm payroll release essentially is this bar right here. Just went up and down and up and down right around the point of control in the overnight session. We have a P-shaped profile, so we are squeezing them shorts. Squeezing them shorts overnight, and we're holding steady with the point of control near highs. So it's looking very bullish. Overnight inventory is about, I mean, I have a chart for this really, but in Delta, the overnight inventory is negative. We have a negative Delta on the overnight, negative 6,000. And on price, we are higher, but the inventory is somewhat balanced. It's spent quite a bit of time underneath and quite a bit of time above the close. So what are we looking for today? Sorry, it takes a second. I'm stressing this laptop out. This laptop's just screaming. The fan is just really going hard right now. By the way, this is what this may be off as well. The glory that is non-farm payrolls. Here, I'll show you what happened. There's non-farm payrolls right there. There's the release right there. And got long, was looking for an out, just for small scalp, nothing. Comes all the way back through, comes above. Looks like it's starting to drift higher. The number is really good, 250,000 versus 190,000 expected, I believe. And I ended up basically scratching that and just it drifted back up, and now it's coming off, and it's just pushing through. It's balancing at the stock zones. It's balancing out at the stock zones, but it's not. It's really not being held up very well by the buyers in this situation. So the current situation, again, this is kind of off. Actually, let me try to fix that screen. Hey, there we go. There we go. All right, we're back in business. Okay, so what are we looking for today? Today, the primary scenario is likely to be. Let me slide this down a bit. Boom. The primary scenario is likely to be a responsive selling on the open. I'm expecting the markets to roll lower into yesterday's range. So an open auction out of range, test up 2750, impulse down back into yesterday's close, consolidate to come back into balance at 2731, 2730, and then I'm looking for this to teeter on yesterday's high price and just go back and forth. But I do expect responsive today. I'm not looking for it to continue higher. The P-shaped flagpole that we have in the overnight session is starting to deteriorate, so I expect this responsiveness to continue. The secondary scenario is to open, push lower into the gap zone, impulse up, hold steady at 2750, then start walking back up into the overnight point of control and pushing the 2766 high. So those are the two key scenarios. Because we're out of range of yesterday, there's an elevated probability of a higher time frame stepping in. So this could turn into a quick run. The other issue here is that we had actually we gapped up, and then we had 2 days of balance. Look at that profile. It's pretty well stacked. It's got 3.5 million contracts in it, and so far it's fairly balanced, right? So we are kind of moving away from 2 days of balance. Balance leads to imbalance, and we're likely to see a run. The most likely scenario is scenario one, where we are likely to test up and push back into balance. But if that proves that, if we see that we've got 2 days of balance and we're breaking higher, it could hold. One of the key prices to watch today is this low volume node. We have a stock zone there, 2724. I'm happy to buy that on the first try down, 2724 area, the low volume node for both days. You can see there's a low volume node there, the IB, and there's a low volume node there on the day before. I'm happy to buy that on the first test, but that becomes a key target below. I should have drawn this a little bit better, but that's the key target below. If it pushes back into the range, it gets to the point of control, but that would be the extended target down at 2724 from 2747. It's about 20 points of range, which is very, very doable, well within the current volatility. It is Friday, okay? It is like Friday. I would really like you to take a moment and find the thumbs up button if you're watching this on a Convergent Trading website. At the bottom of the YouTube screen, you'll find a YouTube button. Click on that, go find the thumbs up and hit it. I appreciate you doing that. And also, because it's Friday, be conservative, be picky, wait for the trades to come to you. Wait for the market to clearly indicate to you that you have an edge. It's really important to do that. I know it's easier said than done, but it's a skill that you need to hone in on and master, as opposed to chasing FOMO trades all over the place and putting yourself in trouble. Good luck.